Hi everybody, this is Lara at pureelliottwave.com with my third review of my previous Bitcoin analysis. I'll link back to the last review, which ended 24th of January, in the description box below on the YouTube channel, and this is going to follow on directly from that. So these are the charts published 24th of January, and for most of this review I have two wave counts, a main wave count and an alternate wave count. The main wave count on the 24th of January expected a little bit more downward movement. The target range 36872.82 to 32883.22 with an invalidation point 28893.63, and that was the price point that differentiates the main and the alternate wave counts at this point. And we had a best fit channel drawn from the start of the bearish movement here to this high, with a copy placed round about these lows so that it contains almost all downward movement. A breach of the upper edge of this channel would be considered giving confidence in this wave count. In the same date, this is the alternate wave count, and it expected more downward movement. The main target 28249.861 with a possible lower range with a very low probability 16310.97 to 9751.14. So these are the two wave counts that pretty much I'm going to go through for the whole of this review. We had that main wave count, which expected a low imminently, and this alternate wave count, which expected quite a lot more downward movement. This one saw a primary degree second wave. They're different at the weekly chart level, but I just want to go through the daily charts with you. Now this candlestick here is this candlestick here. What happened over the following week up to the 31st of January, price did move a little bit lower, and it's ended just below this target zone for minor wave 2, and now it's considered for the main wave count minor wave 2 could be over, and looking for a breach of the channel to add confidence and then upward movement for a third wave at 3 degrees. But we still have this alternate wave count. This wave count now is considering a double zigzag for primary 2, with the second zigzag beginning here, A, B, C, B to move a little bit higher. This candlestick here at the end of this week, 31st of January, is this candlestick here. So for the next week, price moved higher, and this at this stage looks like it fits this main wave count best, but I do still have that alternate. This wave count still sees minor 2 ending just below this normal range, and now a third wave at 3 degrees, and now the channel is breached by upward movement, adding a little bit of confidence. The invalidation point remains 28893.63. There is still this alternate, but this alternate has an invalidation point 51953.62. At this stage, that was rather a long way away. It's considering the double zigzag for primary wave 2 still. This candlestick here, let's jump forward a week. What happened is this candlestick here, well, price is essentially moving sideways. So for this main wave count, I'm expecting a 5-wave structure up to develop. And for the alternate wave count, I'm looking at a possible minor wave B bounce over and a C wave down to begin. This candlestick here on the 14th of February is this candlestick here. Now we're looking at the 21st of February. Price is moving lower now. And for the main wave count, I'm considering that a 5 up could be complete, and another second wave correction has reached the 0.618 Fibonacci ratio, but most certainly could move deeper. The invalidation point now is 33184.06 for the main wave count. Now, the alternate wave count still expects more downward movement. I'm playing with some more targets here, 10056 with this possible range, 16310.97 to 9751.14, but the higher probability target still the 0.618 Fibonacci ratio at 28249.861, or at least the first expected area for support, 28249. Now this candlestick here on the 21st of February, let's jump forward a week, is this candlestick here. Now a week later, price is essentially moving sideways. From this high to this low, it could have another 3-wave structure down, and it's finding support just above the base channel, which continues to hold. So at this stage, this is still the main wave count. The invalidation point still 33184.06. But on the same week, we do still have this alternate. Now I've changed the structure of primary 2. Instead of a double zigzag, I'm considering a single zigzag. A, B, and now expecting C down with 1, 2, and a third wave down. Target's still the same, with the first expectation for support still close to 28,249. Now this candlestick here, the 28th of February, is this candlestick here. Forward another week and price is essentially moving sideways. So we still have the same 2 wave counts. Now price is essentially consolidating resistance and support. And from a classic analysis point of view, we need to see a break above resistance or below support before we can have confidence in what direction the next trend is going to go for Bitcoin back on this date, 7th of March. The main wave count has invalidation point 33184.06. The alternate wave count still expecting downward movement, and that first expectation 28249.86. Now this candlestick here on the 7th of March is this candlestick here. Now this is the main wave count on the 14th of March, and price is still consolidating with resistance and support. The invalidation point still the same. And the alternate wave count still playing with different ways of labelling primary wave 2, now considering intermediate A, maybe a triangle for intermediate B, and confidence below 33184.06 for this wave count. On the 14th of March, this candlestick here is this candlestick here. Price is still consolidating, essentially moving sideways, and so I have both wave counts. This main wave count considering an upward breakout, and the alternate considering a downward breakout. And here's the alternate considering a downward breakout imminently. Now this candlestick here on the 21st of March is this candlestick here. And on this date, now price is closed above prior resistance. So at this stage, it still looks like this main wave count may still be correct. Now I'm moving the invalidation point up quite a lot to 42316.555. And there is still an alternate, still considering the possibility primary 2 may continue lower. The main target 28249, a possible lower target 20237. Still confidence below 33184.06. Now this candlestick here on the 28th of March, let's jump forward a week again, is this candlestick here, and now price is back within a consolidation zone. Still a series of higher highs and higher lows so far though. So at this stage it still looks like the main wave count certainly has a reasonable chance. And I do still have this alternate. Target 28249, starting to be a little bit firmer now. This candlestick here on the 4th of April is this candlestick here. And now, a week later, price has moved strongly lower. And it was at this point that I'm starting to consider that this series of overlapping first and second waves for the main wave count is no longer really having a really good look. The invalidation point's a little bit higher now, 37266.582. And I do still have this alternate wave count, and it's expecting more downward movement. The first target, main target, now quite firm, 28249. This candlestick here on the 11th of April is this candlestick here. Jump forward a week and price is now moving lower, and I'm starting to get quite concerned for this main wave count. This is a time-consuming second wave correction at sub-minuet degree. It's more time-consuming than minuet 1 degree higher and minute 2 degrees higher. And this choppy overlapping movement is starting to not quite look right for the start of a new bull trend. But the problem here is, if you look back at the price history of Bitcoin's bullish trends, it does start out slowly. And it starts with really deep corrections. 80-90% of the prior first wave is really common for a second wave correction. And this is one of the aspects that makes Bitcoin's lows so much harder to identify than its highs. And so it's really important to be open and flexible and have an alternate wave count to not get stuck on one idea, because then invariably if you do that, the market will prove you wrong. The invalidation point 37,266.582, and the alternate wave count this week, still expecting that downward movement to 28,249. Now this candlestick here on the 18th of April, this candlestick here a week later, really not much has changed. Price is essentially moving sideways. So this is the main wave count on the 25th of April, expecting an upward breakout, and the alternate wave count on the 25th of April, expecting a downward breakout from this consolidation zone. Let's see what happened. This candlestick here on the 25th of April is this candlestick here. Well, price is moving sideways slowly, lots of choppy overlapping movement. It's still consolidating. There's resistance now about here and still support here about 34,459. And the alternate wave count still expecting more downward movement, lots of choppy overlapping movement either way. Now we've got here a series of overlapping first and second waves developing for the alternate wave count. So at this stage you really would have to sit on the fence nearly and be open to either possibility, an upward breakout or a downward breakout. Now this candlestick here on the 2nd of May, this candlestick here, and it's at this point that this is now the main wave count. This is the wave count that now expects and widens the target to a small zone, more downward movement, 28,249 to 26,018. So now we've got a downward breakout. The main wave count was invalidated, this was the alternate, and now it becomes the main wave count. I'm widening the target zone to a to a small zone based on 2 degrees primary and intermediate degree. And the idea here is to use Fibonacci ratios between your actionary waves of your impulses and Fibonacci ratios of your first wave for the correction for a second wave, to see if you can get two numbers that are really close to each other. If you can find that, then you have a target zone with a higher probability. So the target zone is now 28,249 to 26,018. This candlestick here on the 9th of May is this candlestick here, and we are getting more downward movement, and this candlestick here now develops a really bullish long lower wick. Price is now within the target zone that was calculated a week ago. This candlestick here, there's a big question mark again. I have always said Bitcoin's lows are much harder to identify than its highs. And so this question mark about this candlestick is the low in? Is this deep pullback for primary wave 2 over, or do we have one more low? So this candlestick here for the 9th of May is this candlestick here a week later, the 16th of May. Now price is starting to move up and sideways. And on the 16th of May, this is the main wave count that considers the lowers in at 26,350, which is in that target zone that this wave count had, and really close to the target that I had for a very long time, which was 28,249. The main wave count here on the 16th of May, and the alternate wave count on the 16th of May. The question here, and I did a whole video going over the technicals looking at the lows. I looked at past major sustained lows of Bitcoin, and I looked at a bunch of technicals. I looked at candlestick patterns, support and resistance. I looked at RSI, ADX, stochastics, ATR, and volume. And I had a look at to see if there were some common features at prior lows, and they really all differ. You don't always see bullish divergence. The downward trend doesn't always get extreme. The lows are much, much harder to identify for Bitcoin than the highs. So trying to pick a low is a bit of a fool's game. You really need to be open and flexible. And so at this stage, this is the last wave count. Main wave count, lows in place. Alternate wave count, considering one more low. The target's still the same, and I'm expecting basically a double bottom could possibly form. I am expecting minor 5 to move beyond the end of 3, but really not by much at all. And if it does that, and we see some bullish divergence after RSI reaches oversold, and if ADX is nearing an extreme downward trend, although I don't think it's going to get there, but if we see some bullishness at that low, I would have more confidence in a sustained low for Bitcoin. And so that's an exercise for the last couple of months basically in how to run a main and an alternate wave count, and I did that last video trying to show you why I have found and I'm sure I'm not the only one, Bitcoin's low is much, much harder to identify than its highs. However, finally, the last thing I want to say, from an investing point of view, it doesn't matter. Especially if you managed to buy Bitcoin a couple of years or so ago and you're like me and you're holding on and you're waiting for the next all-time highs and the next big bull run, it doesn't matter if the low is in here or it's going to have one more low. The only people it's going to matter for are people who are day trading Bitcoin or swing trading Bitcoin. And in my opinion, there are far too many people day trading and swing trading Bitcoin who are not very experienced traders. These cryptocurrency charts are the most volatile I have ever seen. Learning to trade in some of the most volatile markets ever is absolutely bound to see your account fully wiped out. It is not advisable. I think only really experienced traders should be trading these markets, and that's another reason why I only do my analysis of Bitcoin once a week. I do not want this analysis to be attracting traders. This analysis is designed for long-term investors. Buy and hold for several years is the best way to make a big profit on these markets. Okay, that's my latest review of my Bitcoin analysis, and I'll try and get this done again in another month or two. Thank you very much.